Why do 80% of traders in the traditional and cryptocurrency markets lose money? This is a question that is widely asked, and this is the question we're going to go ahead and answer in today's video. Along with that, we're going to take a look at Bitcoin, look at the traditional markets, and talk about the next directional move. Let's dive in. Okay, MegaWhale team, welcome back to the channel, guys. Thank you for tuning into today's video. I hope you're all having a fantastic day. We're going to go ahead and take a look at the charts today, talking about Bitcoin, talking about the price action. We might go over Ethereum a little bit, and we're also going to discuss an interesting topic that I mentioned at the start of the video in the intro, which is why the majority of people lose money when trading. And I'm going to talk about the mindset behind it, and I'll talk about what trading really is in a nutshell, and how you can align your mindset and your actions to better reflect that of a trader and therefore influence your profit potential. Let's go ahead and dive into the stuff to start off, which will be the market data. Now smash the like button, hit the comment button, leave a subscribe if you're interested in seeing daily analysis on Bitcoin. We focus on the technicals, we focus on the data alone. We don't talk about anything speculative. We don't even talk about the news really, we just focus on the charts itself. As well, guys, follow us on Telegram. Second link down below. You get access to all of our videos, analysis, charts, information, so much more over here. And if you're interested in our VIP channel, you get access to all of our trade signals, all of our updates on altcoins, exclusive charts such as these, and so much more. Let's go ahead and dive in. So, the month so far, December, we're down 1.12%. Nothing too significant for the month. You know, we've been very much sideways for the last couple of days. Actually, as a matter of fact, the entire month we've been very much sideways. We take a look at December as a whole right now. We're pretty much, you know, this is December over here. I'll go ahead and draw a line in. This is the start of December over here. We've pretty much moved in a maximal range of about 3.5%. But for the most part in the last 2 days or 3 days, we've been stuck in about a 1% range. So we're very much consolidating right now in a very tight compression between what is this major upward trigger, which we talked about yesterday, we'll talk about today as well, and this downward support, okay? We're very much just pushing sideways. So the next directional move will occur once we either break to the downside here, okay, or we break to the upside on that trigger. So as we can see by the price action, we've been in a tight consolidation. When we're in tight consolidations, we generally know volume's been low, and we can generally see that volatility's been low as well. So taking a look at volatility, we can see quite a big drop off in the volatility over the last 24 hours. We can see we went from around 4.13 to 4.02. And this drop is going to continue as the consolidation continues if we don't see a significant move. But as we've said already, guys, we've been talking about for a long time on this channel, when we see these three things occur, which is sideways consolidation, decreasing volume, decreasing volatility, it lets us know that we are in a tight consolidation and we are expecting a directional move, a volatile, a explosive move to come after it. So keep your eyes open because we're going to see another big move occur moving into this new week. During this week, maybe at the start of this week, we should see the next move occur. Just as we did last week, we saw that next move occur. We saw a pretty steep drop, push upwards on that last week over here, and then we saw a drop down. We saw volatility start to kick up, and then we pushed sideways through the weekend as we pushed sideways through the weekend over here. So keep your eyes on the charts, keep your eyes aware, and be aware that with this decreasing volume, decreasing volatility, decreasing volatility in price action, we do expect a move to soon follow. So let's take a look at the traditional markets. DXY, again, these markets are closed. The DXY will open pretty shortly. The DXY is indicating a decent amount of support here. If we do lose the support level, we can expect the DXY to come down to 103.78. Of course, dropping on the DXY is inherently bearish for the bearish for the dollar and will be bullish for the markets. We can expect the traditional markets to rally. We can expect Bitcoin to potentially head upwards as there is a degree of correlation between the two markets. Total cryptocurrency market cap not telling us too much. We are in this consolidation zone between that 32 moving average, okay, and the 4 moving average. So a smaller time frame moving average is kind of keeping us in this pinching zone before we even make that directional move upwards to a 50, or we come back down and deeper lower and we get another expansion in these moving averages, okay? And an expansion can follow by compression again before we continue, okay? So either we're going to get an expansionary phase in the moving averages here, or this consolidation and compression is going to result in a push upwards like we saw over here to that 50, like we've seen many times prior to this. Dow Jones, same spot, bearish divergence up over here again. These bearish divergences are quite strong. It's quite a long-standing bearish divergence, also August, September, October, November, December, a couple months over here, and it is quite a steep, you would say this is almost like a rounded bottom formation. It's quite steep over here, so we do have quite a large directional move to follow if we do break to the upside of about 35,000. Otherwise, guys, bearish divergence, we can expect some degree of a pullback if the DXY does actually open up bullish. Same for S&P 500, testing that bear market resistance here. Breaking through a bear market resistance will, of course, be bullish for the markets. We can expect a move continuing. There is a chance that we do come bearish over here. We do have this rising ascending wedge formation. If we do break to the downside, of course, we will continue downward. So look for liquidations. Look for liquidity wicks above this trend line before we potentially head back down into a bull trap. Enough about that, guys. Let's go ahead and get into Bitcoin. So, trying to figure out if we'll talk about the markets first or we'll talk about the information about the 80% first. Let's talk about the markets first, and then we'll talk about, that statement which we said at the start, which is why the majority of people lose when trading. So we'll talk about the analysis, get that over and done with, and then get into that. So what we said already for yesterday, we're in this tight horizontal crunch zone essentially between the 17,160 and 16,800. This is a tight crunch zone. It is a 4 or 5 day long horizontal consolidation now, and we do expect that next move to subsequently occur if we do lose this level, which will be taking out that low over here, or of course, sorry, just adjusting myself, or of course, break above the 17,160 level, which of course will take out this high, and then we can continue this price to climb all the way upwards to hopefully around 18,100. Okay, to the downside, guys, if we do break down over here, we can expect that continuation to the downside. We do have this uptrending support level over here where we could potentially find support in this midline. Now, this isn't a random level. If we bring up the VRPV, we can see that POC level sits around about this level. So we do have support at around 16,550, of course, by that volume range, that POC level, point of control right over here, where we can expect that price to retrace towards, where we'll either find a new bottom and then reset that uptrend, okay, or lose that level and subsequently come down and retest some of these lower supports. We have already said, guys, on the larger time frame, we are starting to look more bullish. There is no doubt about it. The technicals are starting to look better, and it's only natural. This is the thing. It can be misleading. It is only natural that technicals start to look bullish after we've had a massive volatile move towards the downside, and then we've had sideways compression. Okay? What does that do to the technicals? Imagine it as a chart. We have a significant drop down very quickly, and then we have this slow and steady flattening out, and it starts to look more bullish as it almost gives the illusion that an uptrend is being developed. I'm not saying it's not, but what I'm saying is the technicals are suggesting that we're starting to gain some macro or larger time frame bullish strength. And all I want to say is it's very, very common to see that occur, particularly after we see significant moves towards the downside. If we see long consolidations followed by significant moves to the downside, all it's doing is smoothing out those horribly bearish technicals into more consistent, more bullish, more neutral technicals, which can give that illusion of bullish price action. And we've seen this happen numerous times. Like, I don't have to go back in history to show you examples, but if we had to go back in history to show you examples, I think the best example on the daily chart would be this zone right over here. The best example of that would be this zone right over here. We're coming up to it. Here it is. We saw this significant, massive sell-off, okay? Then we saw this steady rise, steady rise, steady rise, steady rise. Technicals were starting to look very, very bullish. And of course, we had that bull trap right over here where everyone started saying we're going up to 30K again, okay? So we do have to keep in mind that after massive drawdowns, if we see sideways compression, it's naturally going to start making these indicators will start to look more favorable again. And that's not saying they're not favorable, they definitely do look favorable, but we have to be aware that, as long as we remain underneath major resistances, our resistance is still resistance until it is proven not to be resistance, and therefore you shouldn't count your chickens before they hatch, essentially, okay? Don't get overly bullish when it's not time or you have no place to be overly bullish. Right now, we are underneath a major resistance. We are within a major resistance level. There's no need to be sitting here taking massive longs, okay, expecting the price to push upwards. Right now, we have broken the uptrend. We're in a sideways, slightly downwards consolidation. We expect these levels to continue towards the downside unless proven otherwise. And there's no technicals I can do, there's no charts I can show you right now that can actually tell us where the price will 100% guarantee go, because it doesn't exist when trading. All we can do is look at the statistical probabilities and base our analysis off the probabilities, okay? You have to trust in probabilities. We'll come back to that, but trusting in probabilities is a very interesting topic that I want to talk about when we talk about the trading and why the majority of people lose. So we'll come back to it. Nevertheless, guys, again, if we do break to the upside, we'll be pushing up to 18,172 to 18,600. And you're probably thinking, MegaWhale, these are some pretty strange numbers. Why did you choose those numbers? Well, I didn't choose those numbers, guys. The charts did. The charts told me these are the numbers we're looking out for. Why are these numbers important? Well, let's take a look. Look at these zones. Look at this support zone right here. It extends all the way across to this level at the 10th of November. We had a support nearly lasting, July, August, September, October, nearly a fight, like 4 months and 30-day long support, 20-day long support. That is that level, 18,172 to 18,656. Technically, on the larger time frame, we cannot even expect any sort of bullish price action on the larger time frame. I'm not talking about short term, I'm talking about medium term, until this level is cleared. Okay, we clear that level, we continue upwards to this trigger. Okay. Until then, even if we get a swing up here, guys, it is nothing more than a short-term swing. That could be a very critical rejection point before we come back down. We do have to keep in mind of the macro when we're taking a look at overall price action. As a trader, I don't really care what happens. I don't care if we go up, I don't care if we go down. All I care about is the zones. I trade the zones, I trade the ranges, I trade the supports and resistances, so I don't really care, okay? But all in all, guys, we look at the macro, there are points on the chart where there actually statistically shows significant strength in comparison to other points. And those are the points that can flip the overall trend. And you want to be identifying the trend and trading with the trend, obviously, when trading. Trading with the trend is one of the most important factors. If trading against a trend, you're more likely to lose. You're not always going to lose, you're more likely to lose. So let's take a little larger time frame and let's see what the trend is telling us. And ignore those little scribbles down there, it doesn't really matter. What we're seeing here is a very clear bullish divergence. I'm typing in bullish divergence like a clown instead of RSI. Okay, what we have over here is bullish divergence. What is a bullish divergence? Bullish divergence is a discrepancy between the price action and the momentum, a positive discrepancy, meaning that momentum is rising and price action is falling. This generally indicates a period of oversold price action, or maybe is sold too deep, or it's been pushed down a little bit too low, or any of these scenarios, or manipulated or held down by a lot of resistance. But generally it does indicate a discrepancy. Okay, so when we have these discrepancies, we can generally see aggressive reversals in the trend if these momentum indicators actually do follow through. Meaning, in this scenario over here, if we do break through our resistance, we can see quite a strong push upwards for Bitcoin into this range, and that won't be a small push, guys. That's an 8, 9, 10% push to a Bitcoin, which is a considerably large amount in terms of ROI. If we're looking at the bull market, 10% is nothing. If we're looking at price action traditionally for Bitcoin on an average moves in days, 10% is a phenomenal move. We get accustomed to these large 20, 30, 40, 50, 60% moves in bull markets, and we forget that traditional markets very, very rarely experience massive movements, massive fluctuations in price. They're more or less consistently stagnant, and then they have these volatile swings every now and again, particularly on news releases, particularly on important closes, or when they break through major resistances. But nevertheless, during intraday movements, is quite slow for the most part. So that is something that's indicating that we do have a potential to reverse the overall trend right now. Of course, that bullish divergence. If we go ahead to a larger time frame, a 2-day chart, what we're looking at for the strength to flip, if you want to look at pure macro, if you're talking like, okay, I want to wait for the best possible time to buy Bitcoin, to hold Bitcoin, to leave it and hope that my investment pays off. If you're looking from an investor standpoint, not a trader standpoint, from an investor standpoint, what would you wait for? What am I waiting for? I'm waiting for a clear, obvious high volume peak, VRPV. That high volume peak right over there is indicating that massive support range we had, a 4.5 long month support range that we had in June. We would need to clear that level. Subsequently, clearing that level will enable the price to push over the 50 EMA, okay, on the 2-day chart. We have not pushed above it before. The last time we pushed above it was here, and I'm going to explain to why that doesn't count in just a second. Heading back to this chart, we can see that that 50 EMA cross was met by a significant bear market resistance downtrend, okay, which we retested over here, therefore invalidating the moving average and pushing the price down. But so remember, moving average is not telling us anything more than the strength of the trend right now relative to the average price of the asset in accordance to the moving average period you're selecting, whether it be a 50, a 20, a 30, a 2, or 1, or whatever it is, okay? So it doesn't necessarily tell you anything. What is very important when it comes to movements of Bitcoin in terms of structural moves, we're looking at structures. We're looking at levels, horizontals, diagonals, structures, patterns, these things that determine consolidation and compression of price action. Because as we already said at the start of the video, after consolidation and compression, we generally have moves. Very important. To the downside, guys, let's go back to our chart here. If we do happen to lose, I'm going to go back to our original chart, which was a smaller time frame chart. Here it is over here. If we do happen to come down and lose this lower level, you know, we're hammering these supports, we're failing to hold, we push down here, we fail to hold, we support resistance flip, we come down, we lose this level here. Happens to happen. What will Bitcoin do? Obvious. It is super obvious. It's like really obvious stuff, guys. We're coming down to the next support level. The price, if you can look at the price here, what has happened this entire time? Looking for an honest, reliable, and accurate exchange that you can trust to trade on, go ahead and sign up to Bitget with the link down below and join myself and all of our other VIP members and other members who trade on Bitget daily. There's a whole range of benefits and features you can actually get by trading on Bitget. These include no government regulations, meaning you can sign up from anywhere in the world. There's no KYC, 0% trading fees on spot, massively reduced trading fees on futures. It's one of the lowest in the game. And most importantly, access to their protection fund. In case the exchange gets hacked, you can actually get reimbursed for your funds, so you can ensure your funds are safe. Now, most importantly, if you do sign up with the link down below, that first link, you'll get access to 2 additional features. These include access to a reward center where you can get up to $4,163 in rewards, and access to the MegaWhale exclusive referral link, bonus discounts. Every other month we do bonus campaigns. We get up to 10% off your trading fees, or even you get a percentage of your trading fees refunded to your account as USDT. Essentially, you get paid to be on the exchange. That's enough, guys. We'll get back into the video. Think about it for a second. What has happened this entire time? The price has been moving between support and resistance levels. Between support and resistance levels, it creates structures, okay? Such as ascending wedges, such as horizontal channels, okay? Such as descending triangles, okay? It creates structures. So the structures develop within macro structures, and you've got micro structures develop into smaller time frame structures. The price moves based off structures. So what are we looking at now? We're looking structurally at 1, descending trend line for bullish divergence. 2, descending trend line which is converging. We're looking at a potential falling wedge. We have got a falling wedge within the bottom apex of a descending channel, potentially indicating some degree of macro reversal is coming. In conjunction with that, if we take a look at the RSI on the weekly chart, we can see that we do have something very important here, which is a falling wedge, okay? A falling wedge. So a falling wedge is a bullish reversal pattern. Again, momentum and price are very tied together. Price follows momentum for the most part. If this breaks to the upside, we break to the upside of this descending channel, we're going up, But what will need to occur in conjunction is the break of that VRPV level on the 2-day and the 50 EMA on the 2-day. So we're waiting for those 4 points of confirmation before we expect any sort of macro reversal to occur. Until then, we do expect potential swings to the upside, guys, but we do expect this downtrend to potentially continue. Like we said, we are still in a macro downtrend, and therefore whatever move to the upside occurs, we should soon expect to follow a equally strong move to the downside, if not a greater move to the downside, until the macro downtrend has broken. Keep it simple, guys. It's actually really quite simple stuff when you don't overcomplicate it in your head. Anyway, that is it for the analysis. You can head off, enjoy your weekend, or you can stick around to find out my answer to the really important question, which is, why do 80% of people lose money in the market? And I'm going to answer this question quickly, but I'm also going to answer it in a quite amount of detail in a few different dynamics. There's obviously a few different reasons why people lose. Number one is it really just comes down to poor mental, and that could be poor impulse control. It could be poor habits you have developed from your childhood even. And I think upbringing and behavioral upbringing has a lot to play in successful trading. I guess answer this question really quick. I get asked this question: can anyone be a successful trader? My answer is yes. But some people are predisposed to certain characteristic traits that will enable them to succeed faster in the space. So you can say some people have a natural talent, okay? But again, if you don't work at your talent, you're not going to get anywhere. So I don't believe anyone is particularly never going to make it in trading. I do believe some people have potential barriers that, again, could be based on their personality traits. Maybe they've got addictive personalities. Maybe they've got poor impulse control. Again, a lot of these traits, these negative traits, are learned traits through childhood development. So again, becoming a successful trader is identifying your barriers, identifying your mental weaknesses, either implementing strategies to overcome those, or if you decide that you cannot overcome those, implementing rules to restrict those becoming a problem. So the next one, and this is the important one of why most people lose, besides emotional control. Emotional control is a big one. A lot of traders will lose purely based on emotional control. The big one is a lack of strategy. A lack of strategy. And there's a few ways to answer this, but the first way is how to develop a strategy. So why is a strategy important? This is the answer. Look at the chart for a second. Every single circle represents a trade. Every single circle represents a trade. So a bad trader is going to think, okay, I need to win every trade. I'm going to jump in this trade. I'm going to have absolute confidence it's going to win. I'm going to jump in this trade, absolute confidence it's going to win. And what that means is they're assessing each individual trade as a separate trade, as a separate entity. What they need to look at it as is an overall collective group. So it's more so that you trust your strategy. This circle here, this bigger circle, is your strategy. Your strategy. The smaller circles are your trades, okay? You trust that overall, your strategy is going to give you an edge, okay? You trust the statistical probabilities of your strategy to give you an edge. And what is an edge? Well, an edge is a slight advantage over randomness, essentially. So an advantage over randomness, it essentially a small profit or a degree of profit or a higher degree of probabilities to success over a group or collective of amount of trades. So it's right success, okay? So strategy over a group of trades equals an edge, which equals success. That's essentially what we look at. So where a lot of people crumble when it comes to trading is they don't have a strategy. So they're not looking at these trades and saying, okay, I have a strategy. I'm going to implement my strategy over a numerous amount of trades. And it doesn't matter if I win some or lose some. It doesn't matter if I lose 5 in a row. It doesn't matter if I lose 2 in a row. It doesn't matter if I win 5 in a row. I know that I'm purely trading on my strategy, and this is giving me a statistical edge based on probability, which will then overall give me a degree of success in the markets. That is what you need to do when you're trading. Unfortunately, a lot of people either don't have a strategy, and they don't have a strategy because they have lacked the knowledge to understand what you should and shouldn't be doing. They lack the risk management skills to actually even execute their strategy effectively. They maybe lack the emotional control to even stick to a strategy properly. Like, for example, they're doing a strategy and they lose 2 or 3 trades in a row. They're like, oh, my strategy doesn't work, I'm jumping to something else. But you have to give it enough time to let it develop. Or number 3, like I said, you don't have the market time or experience to understand how markets move. You don't know when to not jump in, and you don't know when to actually jump in. So you need to develop a strategy. If you have a strategy, You don't care what the individual trade does, whether you have a trade, a success, you have a loss, and then you have 3 trades that do well in a row. You don't really care what the individual trade does, because you know, as long as you effectively follow your strategy, okay, you'll have an edge in the market, which will lead to overall success eventually, okay? And what is a strategy? A strategy doesn't have to be, okay, I enter a moving average cross, blah, 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 blah. It doesn't have to be that. But it can be a set of rules and principles that you have designed and followed and forward tested and stuck with for a long enough time to know that it's successful, that you implement within your trading, okay? So what is a strategy? A strategy is defined, and it can be defined differently for every individual, but for me, it's a set of rules or practices that you follow, I would almost say religiously, okay, in your trading, without any expectation of a profit or loss in any individual trade, but over a course of a collective amount of trades, you know that that strategy has a statistical edge, and therefore you have success, okay? And I can show you all my trades I've done. I can show you my track record on VIP. I can show you everything. Not every trade is a win. We have a 75% win rate max, okay? Some months we have 90% win rate, some months we have 60% win rate. But overall, we have a positive result every single month. There's not been a single month in VIP where we have had a negative month. I can show you the results over on chart. You can click any one over here, any single month. April, 23 wins, 13 losses, okay? Every single month, I can guarantee you we have had profit. July, 24 wins, 8 losses. And I can keep going. We can go August, 25 wins, 7 losses, 78% win rate. Going down, let's go like even September, okay? 27 wins, 7 losses. So if you have a strategy, it doesn't matter if you're losing trades, because all in all, eventually you will come at a collective profit. So my main answer to that, why do 80% of people lose money when trading? Poor emotional control, and that means they're basically gambling, okay? And 2, they don't have the experience, knowledge, information, and time required to develop a proper strategy, which is gonna almost guarantee profits over a spectrum of trades. And again, even if you have a successful strategy, you don't know it's successful until you actually dedicate your time to sticking to it 100% over a course of a few months. You have to actually practice. I've got a few strategies I'm working at the moment, some new mechanical strategies I've been developing over a period of time. Maybe I'll share them, maybe I won't. The VIP doesn't know about them at the moment. We've done 75 trades on it. It's been 48 wins, 27 losses. I'm reading off the chart over here, and I'm at around a 217% profit on my portfolio from that since the 14th of September. And again, this is a purely mechanical strategy with a degree of, I would say it's mostly mechanical with a degree of self-assessment. You have to make some degree of decision in there, but again, it is mostly mechanical, meaning there are specific entry conditions, specific closing conditions, specific stop loss placements conditions, and specific target conditions. These are preset conditions to the trade that I do not change. They're preset, meaning I have to take the trade with those preset conditions. Once I have those entry conditions actually met, the trade will then active. Anyway, guys, I hope you enjoyed the video, and I wish you guys a fantastic Sunday. Whatever you're doing, enjoy it, and I'll catch you guys in the next video tomorrow. Cheers.